Hey everyone, I'm Jensen Yang. This is Kitco News. Don't forget to hit that subscribe button for the latest. Well, NVIDIA, the tech giant at the forefront of the AI revolution, released its latest earnings report last night. Despite strong numbers, the stock is down this morning as investors start to question whether the AI boom can continue driving the company's extraordinary growth. And surprisingly, even with NVIDIA down, the S&P is staying green. But before we dive into that situation, let's take a quick look at the broader economic picture. The U.S. economy is presenting a mixed bag of signals. On one hand, GDP grew at a revised 3% annualized rate in the second quarter, up from the initial estimate of 2.8%. Now, this boost was largely driven by stronger consumer spending, especially in healthcare, housing, and recreation. However, there are signs troubling under the surface, particularly in housing and manufacturing, where high borrowing costs are starting to bite. And let's not forget that the government has been revising numbers downward, which raises the question about the true strength of the economy. Now, with the Federal Reserve expected to begin lowering interest rates next month, the big question is whether these moves will be enough to keep the momentum going. Now, on top of that, the labor market is showing signs of strain. Recent regional Federal Reserve surveys indicate that payrolls in manufacturing are shrinking and employment in service sectors is declining. Factory workers are seeing their hours cut, which could lead to potential job losses down the road. Now, with previous job growth numbers also being revised down, these new data points suggest that we could be facing a tough job market ahead. All right, let's get back to NVIDIA. The company's third quarter revenue forecast of $32.5 billion did beat the average estimate on the street, but it was the narrowest beat that we've seen since early 2023. Now, if we combine that with production challenges on the new Blackwell chip, and investors are starting to wonder if NVIDIA's growth can keep up. Now, the stock is currently down, but we see it starting to become a little less volatile as the market reacts to these concerns. Adding another layer to the story, it's worth noting that the CEO of that company, NVIDIA, Jensen Yang, has sold $580 million worth of company shares so far this year as part of a preset trading plan. Now, with another 1.2 million shares left to sell, valued at around $150 million, the timing of these sales, especially the pause just before the earnings report, adds a little complexity for investors trying to gauge the company's future. Now, of course, that stock has been a major driver of the S&P 500 gains this year, but today's sell-off suggests that the company's valuation might be hitting a ceiling. While other tech stocks like Broadcom and AMD are up in early trading, the broader market is watching closely to see if NVIDIA's struggles could signal a wider tech slowdown. Okay, so NVIDIA is facing a reality check as the AI hype shows signs of cooling off, but with the broader economy showing mixed signals and government revising numbers downward, the next few months will be critical for both NVIDIA and the tech sector. Of course, we'll continue to monitor these developments closely here at Kitco News. I'm Jeremy Szafron. Stay tuned. Lots more to come.